Good evening, everybody. Welcome to this evening's ACY Securities webinar. Tonight is a review of the recent Forex trading patterns, top trading setups from the month before. So it's going to be a review of price action from last month. Can we learn anything from it in hindsight? So you can move that forward in your trading and maybe see it next time and benefit from it. So that's what we're going to go through today. So quite a relaxed session. Before we get into it, if you can read through the disclaimer. All right, let's move along. So if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading in the Forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. If you want to connect with me through the week, my analysis can be found at our website, acy.com, Market News tab, on our YouTube channel, ACY Securities Australia, and you can also connect with me on Twitter and LinkedIn there. And if you want to get access to our Telegram channel, we're posting analysis in there, then simply contact Nathan. I'll put his details in the chat now as well. If you want to get access to my chart layouts and templates, he will organize that for you. And if you've got any questions about setting up an account, be it a demo account or a live account, Nathan is the go-to guy. He'll sort everything out for you. So his details are there in the chat. All right, so let's get to my charts. And we're on about 45 minutes tonight. So I'm just going to get my list. I've been reviewing a few pairs today. Some trades I've taken, some that I haven't, but I've also been looking at the market hindsight. I'm going to start with the Aussie yen. And, you know, sometimes I learn something about the way I was looking at the market and the way their market actually unfolded for the month. Sometimes I'm correct, sometimes I'm not. And can I learn from something, how I was viewing the market at the time? All right, just passing over. We'll be on in a moment. All right, so I want to start with the Aussie yen, and we'll do a full top-down analysis of what's been happening for the month, in the previous month, and the overall structure. So the overall trend here is we've moved down to a lower bottom. Just here, we formed a lower top. Now, at the start of the month, we didn't know that was going to be a lower top, but you may have started to think maybe a lower top would form. And going to the weekly chart, that's the range we've been retracing back up from that monthly perspective. In fact, that's correct, yeah. But what I actually was doing through the month was I was also looking at this range here. Because on the weekly chart, we had a lower top, lower bottom. So I was measuring this retracement up to the 62% level. So what we've actually had is a fair at the 62 level, moving down to the low here. Now we may be bouncing up at the moment to put in maybe a further lower top, but that's this month. Now on the day chart, I actually took a trade in here, this area here, round about the 92, may have been on this candle here, but I got in a little bit ahead of the setup that I'm going to show you, because I saw this lower top forming, and that I think may have been just in the month before. So this is the start of the month just there. I actually got in, I think, in here, but this is just a resistance kind of trade. Is just breaking it down from the monthly chart going down. The trends are down on the monthly, on the weekly, and potentially on the weekly. Up here, we're possibly putting in a lower top. So I'm just following the structure and trend and have an anticipation that we're going to move down the range. So down to the 4-hour chart, and it's up here where I actually got in just the month before around here. But what I want to get across to you is when the trend's down, you can get consolidation on the 4-hour chart, and we actually started to form some form of some consolidation across here. All right. Now, just taking the higher time frame trend, which is down. So if the higher time frame trend is down, all right, and then you drop down to a lower time frame and you start to see a little period of consolidation, then look to sell the top of the range. All right. So this is what we're getting. High time frames trend is down, and we start to get this consolidation phase, and here it is. All right. Now you're going to trade it at the top of here. Depending on where you're drawing the top of the range, we're more here. But the range, drawing a fib across the range is there. Okay, and just simply trading the fib range trade is you're selling at the top of the range. Stop goes above the 127R, and just monitoring the ranges on the 4-hour chart structure. The overall trend on the high time frames is down. It just goes sideways for a period of time, fails up here 3 or 4 times up here. All right, so trying to sell at the top of a range when the high time frame trends are down, and then trying to hold that trade for the trend move down. All right, so there was an opportunity up there to trade. I actually traded as we were starting to head down. I think it was on kind of this candle here, but I was just holding my position through this sideways range. So there was a nice range, top of the range trade there. And then we start to break down. Now, what I encourage you to do is take snapshots of these, go to your own charts, take snapshots, because you're going to see the same thing unfolding all the time. And the more that you've got a picture there to see it, the next time you see it, you go, okay, is the same thing happening here? So further on into the month, we turn into a downtrend quite clearly through here on the day chart, and we break through some lows here. All right, break down. So this is just really a structure trade. There's broken support here. There's support. It's at 90.22. So we come back up here, and there's also on the 4-hour chart, there's a high on this candle here. So just dropping it down on 4-hour chart. So we know the high time frame trends down. All right. So first of all, what we get is it's a very simple breakup structure here. Continue the downtrend, we break down through support. So you should expect broken day support to be resistance. All right. So it's just a simple look to sell at resistance, stop above the high. Now, if you want to wait for some confirmation there, then you can simply trade the 4-hour entry. 4-hour entry, once you've hit the resistance level, then you can see the candle starts to go negative and finish, then your entry is here. And you're just trading down from broken day support, becomes resistance to continue the move down. Now, we actually come back up for a retest of that area over here. And whilst it gets fractionally short, if I just adjust what the structure is on the 4-hour chart, so that's the day chart level, but then there's a 4-hour area of broken support here, 90.16.2. Then this movement back up here is just trading back into 4-hour and day resistance, okay? And again, you can just wait for the 4-hour to confirm a reversal. And there the 4-hour candle reverses at your resistance level, back in line with the day trend. So there's the sell level. Now, you don't know this candle is going to come, but clearly if you're selling the break of that candle low, you're going to be, happy about that move down. And that offers a very good risk reward, when that obvious reversal happens. Now, so those are some structure trades. If you simply got a very clear idea of what the high time frame trend is, both the monthly, weekly, not both, but all monthly, weekly, daily trends are all down. So just looking for price to move back up to resistance and looking at the 4-hour chart there for an entry. Now, I'm not going to talk too much about the current month, but where's the market trading at in the current month? You know, I'm just discussing this area of resistance. Current month is possibly forming a double top there, and we can review that maybe next month. But a structure that's formed in last month now is being used in the new month. All right. Now, this is, I guess, a little bit more advanced. This is just, you know, I actually shorted up here. I didn't actually take it off down at the bottom. I didn't maximize the profit on the trade by taking it off down the bottom because I thought we might decline down further. But in any event, what I want to highlight is the bounce where we reversed down here. This bounce down here. We've got monthly support here, 87.01. Now, this might be a difficult trade to take if you're not trading down and you're making money. But what I want to say is that's at 86.24.7. We traded down into a double level of monthly support, and we've had a bounce off there at the moment. But if you're short into that level, and this is just something I'm reviewing for myself as well, but if you're short trading down into that level, potentially because it's monthly support, it's a double level, we could get a bounce there, and clearly we've had a bounce up. All right, but when you're trading down into 2 levels of monthly support, this is probably where if you're short, I was thinking maybe this area would break, but it obviously didn't. But in hindsight, this is a strong level of support, and really, if you're short into this area and you make a very good profit and you take your trade off down here, then this is how you could theoretically fund a trade back the other way, which is kind of counter trend, but it's at a clear level of very, very strong support. So I just want to try to highlight to you that if you trade into a double level of monthly support, there's a very high chance you're going to get a reversal back the other way. All right. Now, in terms of a pattern set up here, there's no double bottom or head and shoulder pattern there. We simply get a change in trend there on the 4-hour chart, and we do trade back up. But I just wanted to highlight why it reversed down there. It's because it's a double level of monthly support. Now, that level may break down through, maybe through the course of this month. Okay, but just something I've highlighted for myself, that if I'm trading into a double level of support, especially on the monthly chart, maybe it's the best time to take profit. I was hoping this level was going to break down, but we were having the banking sector drama and it was getting very kind of risk off. So I was holding my position thinking, well, if the drama keeps going, we're going to maybe break through there. But no, the clear double level of support held quite nicely. And of course, time has proven that, yes, the best option would have been to take the trade off at support. All right. So that's the Aussie yen. Now, the Aussie dollar might take the Aussie dollar and the New Zealand dollar kind of one after each other. It's been rather slow going for the best part of the month. Most weeks in the month, we've only been having, as you're saying, can I show the monthly support on the Aussie yen charts? Well, I thought I did. There's the monthly chart. So you got that top there, 86.24, and that low there at 87.01. All right. Now that area there may not necessarily change the overall trend, but what it means is that there's enough buyers there to create a bounce. And aloof Mason, you see over 100 pips down to the monthly support on the Aussie yen at the moment. If you're talking about currently, yeah, there's 100 pips to go. If anybody's part of our Telegram group, I highlighted a trade today on the Aussie yen in this area here at the central pivot point. So I don't know if anybody caught that one, but I did highlight a nice area to watch, and it failed there for a move down with the potential of, the potential of a double top there at the moment. So if this is going to be a true double top, we've got 100 pips to go to get down to support, but maybe we'll break that area of support this month. And the actual price projection for the double tops all the way down at 81.91. So today was probably the key day to get in when we failed at the central pivot point today. All right, so you can watch to see whether that structure unfolds over the course of the month. And today, here's the central pivot point holding perfectly for a trade down. All right, let's get into the Aussie and have a look at last month. So last month, that's last month's trading here. The month before, we had an excessively aggressive month down. And on a number of pairs, I'll talk about it on some other pairs as well, but I was expecting a number of pairs to the US dollar had this same very aggressive monthly candle down. So I was just expecting that we were going to have another maybe aggressive month down. Now, clearly on some pairs we didn't. For the Aussie dollar, we did finish negative. We just had a fraction of a month up on the new month. But for the most part, as we just go through the time frames, so the monthly trend here is to a lower bottom, that's a lower top. And the weekly trend here, we're moving up from a lower bottom for most of the month. Our first week down, and then we were kind of slowly but surely grinding up. All right. And you may have said the trend was up here through the month, high tops and bottoms, but an area of resistance here kept holding. And I traded a few times down from this area. Is we, except for that blue day there, which is in the new month, we didn't get any candles really closing above this 67.16 level. So sometimes in a month, you can just get a support level or a resistance level that's just traded around all month. And 67.16 just held all month. And as well, from that high to low, we pretty much traded within this fib range all month as well. So we had a couple of touches up here at the 79% level where you could have traded a 79% retracement to trade down. Didn't obviously move down to the profit target levels, but if you're trading here at the 79% level, stop above the high, then you would have managed that trade hopefully to break even and maybe some profit. All right, but more importantly, I just want to drop it down to the 4-hour chart and have a look at that 67.16 level. We're back up below it now, but in the new month, so we had this trade break down through. Start of the month is in here, came up exactly to the level, right, and then fell off. And then we can have a look at the price action just here, where we form a little bit of a head and shoulder pattern. It's a little bit sideways, but it is a true head and shoulder pattern in that we have left shoulder here, your head here, and then the right shoulder there. And we come up from a lower bottom. And you could have just traded your entry at the resistance level where the 79% overlaps, or you could have waited and tried to trade at the left shoulder here. All right. Either entry would have worked just fine. I would have probably taken the level of resistance from that top there with a 79 and almost traded down to 127. All right. So there's a little head and shoulder reversing down from your day chart resistance there. Hopefully, though, when you're looking at this in hindsight, you can see how this level, see how we try to move above here, and then we fall back down. Now in here, I would have been, when that came all the way back down here, this is a retest. we fail and there's a retest in there. That's where you really should have been trading on that retest. Stop above here to trade down that way. Then we maybe get a bit of a larger head and shoulder pattern forming here, in that if we just go up. All right, so then drawing your fib, 62 is a little bit below your resistance level. Now, if you trade at the resistance level, it would have showed you some profit, but the 79% level, if you traded at the shoulder over here, so match the shoulder, that's the 79% level, matches that perfectly, and doesn't come down and meet the target, but it clearly comes down and offers some profit. All right, ultimately we've got driven up, but price kept failing at that 67.16, and if you just map out the swings there, you can see a small head and shoulders, a larger head and shoulders. Ultimately, the larger one doesn't run out to a profit target, but you would have been able to manage some profit on it. And I got some questions coming in. I'm getting a question about the Aussie. There's a double top on the current price action on the 4-hour chart. Well, potentially over from that side there, yes. Maybe there's a double top from over here. All right. I'll just clear this off. So that level, that's just showing you how one level through the course of the month, if you just, if you just traded that level all month with a 100 pip stop, price just kept moving back down. You could have managed trades into profit. All right. And in fact, to be perfectly honest, I don't think, yeah, if you traded at 67.16 last month with a 100 pip stop, looking for a long-term decline, which really didn't, come around the corner yet, it hasn't actually traded up 100 pips from that level. So if you were looking at that level for maybe a long-term positional play because it kept holding and you had a 100 pip stop, you could still be in that trade now, and you don't know by the end of this month that we're in whether that trade that you would have taken last month comes to a nice profitable fruition this month. All right. As to the double top, there's the potential of a double top across here. I'd prefer that this wasn't in an uptrend up through here, and that it was looking more like, I prefer it to look more like what it's doing on the Aussie yen, where we've simply come up from the lowest bottom up to meet the tops. So we've got two equal tops there moving up from a lower bottom, where on the Aussie, we have all these higher bottoms. So I prefer it to be from a lower bottom, but potentially, yes, that could be the same thing. Both pairs are presenting the same thing, failing at a high from last month. That actually might be from the previous month, but it's really almost the same thing, except that's the higher bottom move up, okay? All right, so that one level there, we had a very similar scenario on the New Zealand dollar, even though we've broken above it. And we had a 50 basis point rise down New Zealand, so that was very unexpected. So we've shot up. But last month, so where did last month start? And this is a very good, I say things repeat all the time, a lot of the time, while the same thing repeated on two pairs for most of the month. Aussie yen and Aussie dollar and New Zealand dollar is, we simply have a look at the higher time frame, lower top to lower bottom on the monthly, lower top forming there. On the weekly, we have a lower bottom. This has just been corrective last month, coming in back up. So high time frame trends are down. The day trend has been up, starting to creep back up this way, but all month it kept fading at 62.70. All right, and you move down to the 4-hour chart. So the start of the month, around about here, so we move down, okay. In terms of patterns, I mean, one of the things that I do with structure is I just simply trade out the structure. So without identifying a pattern, if I'm seeing an area that keeps holding, so for example, we got a little bit short here. All right. If I saw this starting to move back below here, then I'd be looking at that as a complete failure of the level and look to sell here, stop above the high. We come back up again here and we fail once more. Now, simply looking to a lower time frame in these areas on a 15-minute chart for an entry is the key. All right. Now, if you want a pattern, then there are no real patterns here. In this area here and in this area here, you're just trading the level. You're expecting that the level's going to hold. You have to get, if you keep seeing a level getting tested, comes up a fraction short, slightly goes above and then comes back below, that level's holding. You have to get comfortable with, okay, selling as close to the level as you can, stop above. And again, using a 100 pip stop here for most of the month, if you traded here with a 100 pip stop, traded here with a 100 pip stop, price never moves above more than doesn't get above 30 pips through the month. All right, so getting good at identifying a key level, but you don't have to just guess because the market's telling you here that this area, and you could actually refine it to this 4-hour high here. All right, then that's a closer failure to that high. All right, and we fail there. Now, when we fail down here, okay, what I would tend to do is then just draw a fib, cross the movement down. Again, you have a 79% level there. Doesn't meet the target, but just comes back up to retest the level once more. All right. Once that candle finishes, you just trade the break of the 4-hour candle. You know, along here, if you're just simply trading the break of the 4-hour candle, so it's a 4-hour trade entry, there's one here, playing at resistance. There's one just there. I know that candle closes fractionally above the level, but you could wait for price to move below the level if you're concerned, and then the break of that low there. The break of that low there is below the level of resistance. All right. Now, ultimately, we've broken above, but for most of the month, if you just simply traded at that line with the 100 pip stop, there's 1 trade, 2 trades, 3 trades there through the course of the month. Now, they don't manifest into hundreds of pips movement down, but they're moving down every time. All right, ultimately we have broken higher. But there, all I'm looking at there is a level of resistance, trading it down from it in line with what you're seeing on the higher time frame trends. Okay. All right. So the Aussie dollar and euro and the New Zealand dollar, it's just really a resistance level that's really holding for most of the month. And we may well find through the course of this month, if we go back to the day chart, that actually turned into a day chart top, that one there, is that could be once more used in the new month. I know we're above at the moment, but like the Aussie yen and the Aussie dollar, this has moved up because of the interest rate hike today. But potentially, you know, we're talking about structure for this month at the moment, but this looks very similar to what we've just been discussing on the Aussie and Aussie dollar. That's just a fraction short of creating a potential double top up there. I mean, that is still potentially a double top. It's just always nice that on the day chart perspective, you get equal tops. In fact, that would be almost a triple top up there because there's 2 highs to the left here. All right. So whilst we've been up today, you know, we may be reviewing that as a potential double top as we move through the month. Okay. All right, let's move along to the euro yen. Now, euro yen's been highly volatile. And I really just want to make a statement for the most part of setting your charts up and defining, what the structure is. Because ultimately, I took you through the month, the 100 pip trade entry, most recently, is if you get really good at defining the structure, that the wider range where you would anticipate there to be strong support and resistance. And then first of all, you just want to monitor and see how price reacts at levels. But this is a weekly low. So if we go to the weekly chart, there's a weekly low here that we false break. And there's a weekly high up here. That weekly high here coincides with that weekly high up there. So that's a kind of a double weekly resistance level up here. All right, and weekly support there. And all this pair has been doing for the whole month was trading down a weekly support and trading all the way back up to weekly resistance. Now, I don't know what's going to happen through this month, but it wouldn't be a bad bet to think we might be all the way back down to weekly support. But all I'm doing here, and I got asked a question yesterday, and this isn't a slew against the person that asked the question, is why don't you use moving averages or RSI? Well, a moving average, two moving average, or one moving average isn't telling you that this is going to fail down here at support and move back up. And it isn't going to tell you that it's going to fail at resistance up here. So what I'm really doing here is I'm using what the market's telling me is where we keep moving up and down from. All right. So the more that you can just sit back and put the levels in, so let's just go through the trend. The monthly trend here is, it's actually up in terms of high tops and bottoms, but it's rather range bound. And this area here at the top, if you look left, there's actually a monthly level over here at 145.68 over here. So whilst the trend is up, we could actually be holding here for maybe a long-term reversal down. We're spending a lot of time holding at that monthly high. And of course, getting range bound on the weekly. All right. Now, this is just a pure range. So, trading this as a range trade, if we talk about the bottom down here, just drop it down to the day chart, trading simply at this low, putting your stop at the 127.0. Now that might be a large stop. It's more than 100 pips, but it trades all the way back up to the high. It gives you a risk reward of almost 1-4. Now, I wouldn't trade putting my stop so largely down there, but if you simply traded this support level and it hit this support level 4 times, if you simply traded it, that structure, once you see it hold 3 times here, right? Now, I didn't trade this because I was trading something else. So I wasn't focusing on this particular pair, but down here, once you've seen it hit 3 times or hold once, then the second time, the third time, or even the 4th time, there's, if it's held 3 times, it may hold the 4th time. Is simply trading at that level with a 100 pip stop. It hasn't failed it 4 times, once, twice, 3, 4 times. Okay. Then it trades all the way back up to the weekly resistance level up here. Again, trading that with a 100 pip stop offered you profit. Then we've actually come up, and that's a 79% retracement up there. But just simply, it's a confidence thing. It's understanding that the market respects high levels of support and resistance. Yes, price can trade through the level a little bit or more than a little bit at times. That's why I came up with the 100 pip entry technique, because if a level is going to hold, it probably won't trade through 100 pips. It might trade through 50 pips sometimes. Or, I've had times where it's almost taking me out at 100 pips and then completely reversed. So the first step is definitely just putting the levels in and watching. Because if you can put the levels in and watch and start to see that the levels that you're putting in are being respected and reacted at, then you should be able to trade at the levels. As long as you're creating yourself a really good risk to reward, you're not going to be right every time. But I mean, at the moment, trading these levels on the euro yen, if you trade down here, you haven't been wrong yet. It's held 4 times down here and then it held at the top. All right, so 5 times. If you traded with a 100 pip entry stop, you'd have been right 5 times in a row. Now, sooner or later, it's not going to work because nothing works 100% of the time. But, you know, through the course of the new month, if we come back up to 145.56, what do you think you should do up there? All right, certainly watch it. Watch, you can use any entry technique you like, but I would certainly be watching for a further failure. And going to ask, have put the level, I've put the level in candlestick and line chart, which is best for the level. Well, the line chart doesn't show the extreme highs and lows. If I create this chart as a line chart, doesn't give you the extreme highs and lows. All right. So using a candlestick chart gives you the extreme highs and lows. So if I'm using this line chart here, you know, that high would be there. So you go, okay, I'm trading there, but the true high is further up because a line chart it's just a close on the candles being plotted. So I would go candles. And hopefully this example on the euro yen is proving to you that, yes, you want to use the extremes. Now, I know some people just use the candle highs and lows for support and resistance. If that works for them, that's great. But I use the extremes of the candles. All right, because you can see here, price went up to the extreme of that candle to fail. All right, these came down to the extreme of that candle. They went more than beyond the body. All right, so I use the extreme of the candles. All right, so, you know, get these levels drawn in because the market is telling you where the market has a very high chance of stopping and reversing. So move on to euro dollar now. This is the pair where, you know, I've had to kind of philosophize a little bit on because from the monthly perspective, February, we had a very negative month. So I was just anticipating we'd have another negative month down. Now, clearly, we're still trading within the month range of February at the moment. But clearly, after breaking just the low of last month, we just reversed all the way back up the whole month. But you know, one of the things that I do kind of have as one of my things is, you know, if I see a negative month last month, I'm anticipating a negative month this month with the general trend. But sometimes, even though we have a negative candle here, the next month is positive, right? But then the month after that, we get another 4 negative months. So I was looking for a month down last month, which meant that I wasn't looking for longs. I was looking for an opportunity to short some form of a retracement within the range of last month, which never really worked that well. I did get a couple of trades off, but really, you know, if you knew that we were going to go up all month, of course, you'd be looking for longs. But looking at the monthly candle before the new month starts, you would go, okay, you'd anticipate a month down. All right. Now, of course, we've been moving up. Now, structure on the weekly, and this is where it gets a little bit complicated, and you can be, you know, proven wrong with your analysis, is the monthly trend here. Lower top, lower bottom. Are we forming a lower top here to continue down? That's what I was anticipating. Now, the monthly, moving to the weekly, the trend on the weekly is still up. That's a higher bottom. That's a higher top. Now, we could just be simply keeping that weekly trend up and it's going counter to what the monthly is. That's where, you know, things get difficult when all the trends don't marry up. All right, so to the day chart. Now, if you were simply, I was going by what the monthly candle did the month before, but if you actually went by what the weekly structure was, then you may have had a different philosophy, because you could have drawn a fib across that range. And what you would start to see is that there's a 79% area here where ultimately the market put in this kind of triple bottom area, started to move up. All right, so if you're looking at the market that way, then you may have gone, okay, I should be looking for longs all month. All right. I was actually looking for shorts all month because I was looking at price action retracing within the monthly range of the previous month. So I was actually looking this way. And I actually did trade up here. So that's the way I had it structured for the month. And one trade that I did take was up here. So this was the FOMC high when we had the interest rate decision in the US up here. And I had my 79% level there. And when I saw price action come back up, starting to hold up here, I moved down to the 4-hour chart. So this came all the way back up. And when I saw this fail here for the second time, then I actually took a trade in here. Just a 4-hour candle entry short. Now, what you could have also done is you could have had a fib drawn across that range, because I was looking at this as a complete failure here at the 79% level, the way I had the fib drawn. Then it came back up to test the same level. And I also had a fib drawn from that high to low, because I was anticipating maybe this would just come up to the 79 level. All right. Now, if you trade at the 79% level, put your stop above the high, that would have worked out eventually for you. I actually traded short of that candle there. So around about the 10900 level. And I made some profit down here, but I was trying to hold it for the long term. So I made some profit and didn't maximize the profit. And of course, prices moved up through that area. All right. So, sometimes when I'm trading, everything works perfect. And, life's great. And other times I can grab some profit, but ultimately the trend for the month was actually up. It wasn't just rallying up for a failure. It's been moving up all month, and we've actually traded above last month's high. So this is still in an uptrend on the day chart and the weekly chart at the moment. All right, so that's how I was looking at price action up here, and that's actually where I did trade. All right, I might just go and have a look at, because we're getting a bit short on time now. I might just go to the dollar yen. And again, hopefully what you're getting from my commentary tonight is, so Slav, you're asking me, did I get the break here? I didn't close it out at the bottom where it reversed, no, but I locked some profit in. I think I got about 50 pips locked in. So I didn't maximize my profit to any event, but I did take some profit. So, all right. So what I was saying was hopefully getting from my commentary that, levels I'm trading around, and I'll talk about these levels in the webinars as well, but of course the webinars are just 1 hour. The analysis webinars are just 1 hour on 2 days at a given time. The market's 24 hours in a day, and they're going to question it. Gamal or El Gamal, you're saying, can I enter a trade now? Well, if you like the level and the setup, of course you can. I don't know what pair that you're referring to, but all right, dollar yen. Now this isn't a trade that I took, but a lot of the setups I'm showing you are all based around like a weekly level. All right, higher time frame level. So here's a higher time frame level of weekly support. All right, and in some of the analysis videos I've been putting out, I put out through the days, not just in the live webinars, I discussed this weekly level twice, 130.40. That is a very strong level of support that could hold the market. All right, now we came down probably about a week and a half ago to this level, and we rejected there on the daily chart. So, sorry, that's the day chart there. I want to go down to the 4-hour chart. Right, so that's down here. So as you break it down, you know, if you see your day chart reject that level, it moves up. All right. Then hopefully you can all see, if you're accustomed to the head and shoulder pattern, we get a move up from there. This is the day chart move down, where we reject, move up just to a higher top. So then you should be anticipating that we could form a right shoulder here. So your entry is on the, it should be on the support level, really, where the left shoulder is. And it's a 62% level. So that's really a perfect head and shoulder pattern where the day chart has rejected weekly support. Okay. And of course, it moves up nicely to 127 now. Trading patterns around, say, weekly level, you know, here's a weekly level of support where a pattern forms on the dollar yen, on the euro yen, weekly support here. Now there's, you know, there's best part of, what is it, 21 or 22 trading days in the month. Out of those 21 or 22 trading days, price isn't going to be at a weekly support level or weekly resistance level on a pair in every one of those days. So what I want to try and get across to you is there are certain days in the month where we're going to be at these major levels of weekly support or weekly resistance. All right. And of course, other days we're not. So I'm focusing when we're at these levels. These are the days that I'm highly focused on to see what I can see. Can I see a reversal? Can I see a pattern forming? Okay. So you have to get these levels drawn in, because, for example, on the dollar yen, we take this to a day chart. You know, a lot of people, you know, if I say, watch this level, let's say price is up here, about the 14th of the month. And I go, watch this level down here. And you go, well, that's miles away. It's like it takes another week to get there. But that creates for you a perfect trade entry and a profitable trade to move up. It's all about patience. I don't like to be trading in the middle of nowhere where there's not a major level of support or resistance where the market's going to respect and turn. All right, Cameron, so you're saying, do I prefer to see these reversal patterns on day chart? Well, the actual pattern here is from the 4-hour chart, but it all stems from the day chart rejecting weekly support. You know, so I'm taking my trigger from what I'm seeing in the higher time frame. So it's like today, when I put in the Telegram today on the Aussie yen, my trigger is this resistance area and the day chart failure. All right. So that's all taken from the day chart. Now, I didn't know when yesterday started what was going to happen, but once that day had finished, it started to tell me that maybe we failed up there and we're going to have a day down today. So then I was looking, I put it in Telegram today, I was looking at this, maybe the central pivot point would hold today and fail to trade down. All right, even if, depending on how you trade up there, but even if all you did was wait for a trend line break, and that would be quite a large stop, you know, but I'm taking all my triggers from the higher time frame, you know, taking my approach and setups from the higher time frame, then I'm going down to a lower time frame to look for a way of getting in. So like on the dollar yen, we got a day chart rejection on weekly support. Ultimately, it forms a 4-hour head and shoulder pattern. And even today, you didn't even have to trade this intraday. You're going to have to use a larger stop. Is a double top potentially could be forming here. You just trade the break of the candlestick low, stop above the high. And then you've got your double top price projection, which you're targeting, which is all the way down at 81.91 at the moment. Now, is it going to get down there? Who knows? We don't know that yet. But I'm not getting my triggers from, why should I trade today? I'm not getting it from just looking at a 15-minute chart, getting it from looking at my weekly chart, my day chart, and as price come to a level where we're seeing a considerable turnaround or not. Now, to put that in, same thing on the Aussie dollar. Somebody said today, are we seeing a double top on the Aussie up here? Well, you could, taking your lead from the day chart here, is that a double top? The candle of yesterday shows you a nice reversal. I highlighted this last night's webinar. Look for 79% retracement. As this was heading down, I said drag the fib down and look for 79% retracement. Comes all the way back up almost to your resistance level. There's a 79% level. There's your sell. Stop above the high. You could have cashed out by now if you wanted to, or you're now holding it for the potential of the double top. And the potential of the double top is all the way down at 63.43. Now, to get down to there, we're going to have a very nice month down. But, hope this is how I'm coming up with my trades, and I'm looking at what the higher time frame patterns are showing me. And then if I am getting in on a lower time frame, I'm trading in the direction of the patterns or the reversals that I'm seeing based on the higher time frames, okay? Everything I'm doing is based on the higher time frames. Nothing is based in my head from just whatever reaction is going on at the moment on a 15-minute chart. All right. I might be getting in from a reaction on the 15-minute chart, but my bias and my direction and my profit targets don't come from a 15-minute chart. Or I'm just checking my questions, see if I've missed anything. Okay, we'll just finish off. Somebody wants me to look at the dollar index, so we'll just have a quick look at that. And we're talking about MACD divergence. What time frame? Oh, so you're saying divergence on the 4-hour and weekly. Oh, so they're saying MACD divergence on the 4-hour and weekly supports. So there's your weekly support, 101.28.3. I'm not seeing any divergence on the 4-hour chart. In terms of divergence, I'd be looking at these two lows here. And price is just, that's a lower bottom to that bottom, and that bottom there is from this area here. So I don't see any divergence. Now you might be looking at here to here, but I think that price action has gone undone and broken. I mean, in terms of divergence, I would be looking at this because we had a new uptrend here, but that failed and has moved to a new downtrend down through there. You know, the swings on the MACD, I'll be looking at that low to this low at the moment. I mean, yes, price could, you know, shoot up there and that will swing up, and then you could go, okay, well, there's divergence there. Well, yes, you could call that divergence, but you know, if we go to the daily chart, that's a day chart low. So really that low is more reviewed from the day chart perspective, which would be that low to this low. So I think I'm not seeing any divergence there on the daily. I'm not really seeing any there. I know you're probably thinking it's from here to there, but I would probably be looking at the moment through this price action here. And I don't see divergence there. Okay. Let's just have a look at the euro dollar. What is that telling us on the 4-hour chart? Because this is the inverse. Now, on the 4-hour chart for the euro, this really hasn't taken out that high yet. So depending, you know, if that crosses down and it isn't above that high, we could get some divergence there to there, but we'd need to start to see some form of failure up here. First of all, this needs to cross down before you can start to consider divergence there on the euro dollar. And I'm not seeing any divergence there on the 1-hour either, but there could form some divergence there on the 4-hour. It's worth monitoring, but I'm not seeing it on the dollar index. All right. Okay, everybody. So that's a review of last month. I always review. Sometimes I'll learn something for myself that I might jot down and go, when that happens next time, I might take full profit and I might stop and reverse, you know, get out and reverse the other way. All right. But what I want you to take away is, you know, if you want to get good, you have to look at the higher time frames, support and resistance, because that's where the market's going to trade to and from a lot of the time. That euro yen is a perfect example. All right. Slide me saying, why don't I consider divergence from the 24th of March? Just because, you know, there's a new uptrend here on the MACD. You know, so I'm looking at the current price action. You know, you could go, well, the problem with what you're doing is you're using that high, but then you could be going back to highs over here if you really want to and make it work for you. On the 4-hour chart, I like to use the most recent price action. Now, ultimately, yes. See, as well with the MACD indicator here, there is a momentum shift back. You know, this price action comes down here, and the indicator comes back down pretty much to the 0 line before heading back up. All right. Now, if this had traded through that high, so let's say it did, if that traded through up to there, I would have looked at that as divergence. But because now that's traded through that high, I looked at that high to that high. All right. That's how I look at it. Now, sometimes you will see you may see price go up where you have a series of highs. All right, so we know that's in a trend going like that. But on the MACD indicator, this peak here shows a lower peak, and this peak here shows another lower peak there. So sometimes then I will be assessing all three, because you've still got a continuation of the trends. You're getting continued higher highs, but the indicator is making a lower top and a further lower top. All right, so I'll look at the trend of what price is doing and then look at the indicator as well. All right, hopefully that wasn't too confusing, but sometimes it's a judgment call as well. But in the most recent price action now, the most two prominent tops, this is broken above that top. So then I'm looking to see, does the indicator follow suit? It may be or may not be, depending. We're not that far away. The resistance level that we've broken above, the 120, what is it, the 109.29 level-ish, 27.29 level. We're only 21 pips above at the moment. We could easily be back below. We could easily be back below this resistance level today, dealing with a false break. All right, and that may then create your divergence there. All right, because the only reason why that moved above 129.29 yesterday was because the US news. US news came out poor for, I think it was the job openings. But before then, it didn't want to move above there. So the news spiked that up. I think there's some more news coming out on midnight tonight. If the news is relatively positive for the US dollar tonight, we'll probably be back below 109.29, maybe dealing with a false break. We may see over the next few days a head and shoulder pattern form there. All right. So you can monitor that. And yes, a bit of divergence may fall. So it's just worth monitoring. All right, everybody. Hope you got some helpful tips there for moving forward in the current month. Just make sure I've got all my questions done. I think I have. All right, we've got more market analysis tomorrow if you've got the time before we hit Easter. So just head over to webinar page, 7 p.m. Sydney time is a time slot now for my webinars. So if you've got the time before Easter, then I look forward to seeing you then. If you don't, I won't hold it against you, but I look forward to seeing you next week once Easter gets past. So if you're having a long Easter break, have a great weekend. Stay safe. If you're still on board tomorrow, I look forward to seeing you tomorrow. Okay, everybody, thanks very much.